author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge, and it is terrific Theme Park Thursday. That's what our guys in production say. It is Theme Park Thursday, folks, and hope you're having a great day. I know that I am. You absolutely should be as well. And, off to a great start. I've got the money section of USA Today, and, you can ask, where have all the bears gone? Because there's certainly no bears in the marketplace. Yesterday had the Dow spring up 81 points, S&P up 11, composite up 31 yesterday. But I do know where the bears have gone, folks. There's always secrets out there. There's always hints. And where the bears have gone, the Coke Bears, folks. The Coke Bears are back. I guess all the bears have headed to the Super Bowl ads. I love those Coke ads. I love with those bears. So I know that I haven't get a chance to read the entire article, but I do believe they're talking about a lot of the interaction, if you will, that is going on inside. They'll come up with some pretty cool stuff. Let me turn my mic on here. I can't even hear myself, which is crazy. I disconnected it. How did I do that? There we go. That's better. So the Coke Bears are going to be back for the Super Bowl, and I'll bet that Coke has some pretty cool ads that are going on out there. Now, as we do each day, as we do each day, if you're watching on TigerTV, which is absolutely one of the things that you should do, folks, because you're going to get a chance to take a look at my charts. And the cool thing about looking at the charts is that I'm going to teach you what for some might be a foreign language. For some that are learning the foreign language, you're going to understand where there's beautiful harmony with regard to measurements from a sacred geometry, from a math standpoint. Some of you will actually be able to look at the chart. You'll see the patterns. You'll see the patterns that we put out there. There's certain peaks and valleys, if you will, and they mostly are represented by math. You can see where there's fear and greed. You can see where markets change. It's great because this is your triptych to success, if you will. And talk about success, I want to just say thank you to each and every one of you that attended last night's workshop that we had. Just a fabulous party that we threw. And, and today it's Sake Thursday, if you will. And you'll see why. I wore my Japan shirt. Yesterday we talked about the Nikkei. We were talking a little bit about the sacred geometry numbers, and so I want to be able to show you that. And as I do each and every day, on my way over to Japan, this is the place that I stop. I go from Florida to Hawaii, spend a couple days there, maybe play a little golf, but certainly rest up for the rest of that. I think from Honolulu to Hawaii, it's about 8 hours, but on the way back, it's only like about 6 or so. How do they make up that kind of time? But and so this is my favorite spot. You should absolutely, if you ever get a chance, go over to Lanai. You will not regret it. If you're looking for peace and quiet and beauty and sunshine, and we got sun in Florida, folks. I don't know what the weather's like where you're at, but I heard on the way in it's going to be in the 80s today. Ooh, what a hot day. And the markets are relatively hot. You got the Dow futures are up maybe about 70 points or so. You've got the ES Mini up 5.5, 5.75 points. The NASDAQ up 9. Everything is up, if you will. And we'll go take a look at these markets. Let's go see what these markets are communicating to us this morning. And actually, what I first have up on my screen here is the S&P. This is the ES Mini. This is the 30-minute chart that we've been taking a look at here for a couple of days. And one of the things, we'll come down here to our little 3 drive to a bottom pattern that was put in on the 30-minute chart. It was put in about 7 a.m. a couple of days ago. And we had a nice confirming candle following that. That was a bullish engulfing. And, folks, those can only occur at the bottom, and that's where the entire body of that candle, the entire body engulfs at least the prior session. In this case here, it engulfed the prior 2 session candles going back from 6 a.m. 6 a.m. to 6:30, and then 6:30 to 7. That, folks, was telling you that the market wanted to move up because those 3 drive patterns are not that easy in this one here. It's not forced. You don't want to force any of these patterns, if you will. We take a look at patterns. We take a look at sacred geometry. What I do want to show you, if you take a look at the market, take a look at the upthrust that we had going into the 4 o'clock hour yesterday, what you're going to see coming off of swing points. And a swing point, folks, that is where you see a defined change in market direction. Well, in this case here, the market moved up from that 3 drive to a bottom from that butterfly from that bullish engulfing candle that occurred at 7, and then the 7 to 7:30 moved all the way up into the session at 5 p.m. on January 24th. What's today? Today is already Thursday, the 28th. Can you believe it? Time is flying. Is it the 27th or 28th? Let me check this out here. It's the 26th. How about that? I don't want time to get too far ahead of us, if you will. But what you can see, so 2 days ago, going in at about 5 o'clock, folks, what you saw was that you saw the market make a high, just kind of went sideways, and then, if you will, the roller coaster ride, if you're just taking a look at this shorter term chart move, moved on down. So you've got swing points out here, and you can see that you had a 1.618 expansion off of those swing points. That measurement is coming from the high down to the low, folks, that was made at 10:30 in the morning yesterday on the 25th. So if you took the distance, if you took the price measurement from there and you multiply it times 1.618, what that would do is that would take you up to this 1324 area. Why do you want to be able to do that? You want to understand 1.272, 1.618, because when you see that type of expansion, what happens is that's when people start to get off the train, if you will, maybe take some profits. And you can see in this case here, that's exactly what the S&P futures did. They made their high. They made it at the 1.618. In fact, if you come over here to the left a little bit, you will see 1.414. That's another Fibonacci summation sequence number off of another swing point. You just want to pay attention to those as well. But when you get that type of move coming in there, in fact, and then if we go to the larger chart, which we'll do, we'll see if there's any other patterns that are out there. But what you had is you had these 2 expansions, 1.618, and the market backs off. Now, when the market backs off, it's going to back off to the 0.382 area. That's the first place. That's what we call that dead cat bounce. And I think yesterday, I know David put something in the den defining how they came up with the dead cat bounce. And I mean no disrespect to cats. I love cats out there. I love all kinds of animals and creatures. And but one of the areas that you're going to first move down to is just simply a 0.382 retracement. And folks, what you're doing when you're taking a look at retracements, you want to have a tool on the charting package that you use that can at least identify that, or that you can measure. And in this case here, if we just simply go from the lows up to the high that was put in yesterday during that 4 o'clock session, you'll see that here, right here, is the 0.382 area. You can see how the market came down there. And what it did as it came down there, it looks like probably we set up another bullish engulfing candle as the market moved lower. Let's see if we did or not. Here's how you would test that out. First, they can only occur when they are at the bottom. If you're looking for a bullish engulfing pattern, and you can do this on all kinds of time frame charts, folks, and it worked here on this 30-minute chart, so you want to be paying attention to those. And so you go to the prior session. Well, the prior session was at 4 a.m. this morning. Probably most of you were in bed sleeping. I hope you were. Of course, if you were on the West Coast, you were probably just going to bed because it's 1 a.m. And my question is, what are you doing up now? Okay, well, thanks for tuning in, though. But in this case here, the close on that candle was, you can see the close over in my upper left-hand session. It's in the light green area. It's over to the left. It says 1317. So what you want to do is the next candle would need to open up at 1317 or lower in order for there to possibly be a bullish engulf. And where does it open up? At 1317, and it closes above that session. So you make this 0.382 retracement, and what you have here is you've got a bullish engulfing candle. And what do the ES Mini do from there? Well, now it makes a 1.272 expansion off of this swing point. That means you would go ahead and measure the high that was put in at 4 p.m. yesterday down to the low at 4 a.m., a 12-hour time zone difference, if you will, and you would multiply that times 1.272, add that to the bottom, and it would take you right up here just as we were coming into the show. So at 9 a.m., it was completing a 1.272 move, and now you can see that what it's done is just kind of a normal thing where it's now starting to back off. So you've got these beautiful expansions, and the question is going to be, how much is it going to back off? Is it just going to be a back off of 0.382, or is it going to blow through this area? Well, if it backs off just simply to that 0.382 area, which you can expect before you get the next piece of information out of the ES Mini, as you can expect it to back off into the 1323 area. That here is the 0.382. More likely you'd see it come back down to 1320. You can see where the market at about 5 a.m., had a little bit of energy in here. And how do you know it had energy? Just simply by taking a look at that candle. Look at how that candle there has got a wide range to it versus, of course, in the overnight hours, you're going to expect there not to be a ton of volume and not a lot of movement. But, when you got Asia starting to come online, the currency market coming online at 2 to 3 a.m. our time. And so you built up a little bit of energy, if you will, and then, boom, you move up higher. So that is on the ES Mini that we have out there. If we take a look at, let's go take a look at the other futures contracts here. Just to get an idea, and we had the Hang Seng came back online last night. That was up 328 points. You still got the Shanghai is going to be closed for the remainder of the year, but this is really a cool day to actually be doing this show, this type of show because what I've been doing for weeks, if you will, I've been drawing these patterns, these potential patterns that were out there. And what we had happen during the overnight hours, folks, is we had all of these patterns actually complete. What you're looking at on my screen in the upper left is going to be the Dow futures, and I'll show you the pattern that completed there. Up in the upper right, you got the NASDAQ futures, and you can see here 1.22, not a complete 1.272. The 1.272, if you were trying to be exact, if you will, is 24.83. So the NASDAQ futures still could do another about 13, 14, 15 points, if you will, and then complete that pattern. But this is close enough for our work, if you will. If you go down to the bottom right, what you're going to see is the ES Mini completing it. Now, what you're going to see on the ES Mini, let's just go ahead and pop that up a little bit larger here since we were already talking about the ES Mini on the 30-minute chart. So let's pop that up, and what you can see there is that is finished just a beautiful, if you will, just a beautiful 1.272 butterfly. Why is it a butterfly? Look at those butterfly wings, folks. It's getting ready to take off. The question is it ready to start flying higher, flying lower? Is it going to go find those bears over at Coca-Cola in Atlanta? 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Give me a call. We can go take a spin around, take a look at your stock. And, I said I was wearing one of my favorite Japan shirts, if you will. And the reason is because yesterday we were taking a look at the Nikkei and the Nikkei 225. I've got that up on my screen. And, and why today is so cool for somebody like myself is because it really is all about pattern recognition. So instead of actually drawing charts, as far as where they could actually complete at, we actually have everything coming together at one time. And the Nikkei yesterday, what I was showing there, and this is why you want to understand, in my opinion, this is why you want to understand sacred geometry. You want to understand these butterfly, Gartley patterns that we talk about. And what you can see is coming off of swing points. It's really important to understand where a market is at coming off of a swing point. It's going to give you a ton of information. In the case of the Nikkei, not yesterday, but the day before, because Nikkei, finished trading, closed down a total of, where's my Nikkei, down 34 points last night. And that was after, moving up real nicely, if you will, but it had a 0.382 retracement coming off of this swing point here back in July 27, 2011. Then what you've got is a 0.786 retracement right here coming off of the October 31st area. You had a 1.272 as you come down to the next swing point that you take a look at on the Nikkei. So you had a 1.272 expansion there. And remember when we were taking a look at the ES Mini 30-minute chart, we saw 1.414. It's also a summation number, and so in this case here, you can see you had both a 1.414 expansion, a 2.414 expansion. You had sacred geometry intersecting all at the same intersection, if you will. I don't know, probably should come up with something better than that, intersecting the same intersection, but you know what I mean, folks. So it was all coming together at the same time, and that said that right there, that should be some real strong resistance. If you go back and you were to take a listen to yesterday's show on the archive, you will hear that. And look what the Nikkei did. That acted as strong resistance even after the Fed announced whatever they announced, which was just nothing more than interest rates continuing to be a little bit lower for a little bit longer, if you will. Originally it was supposed to be through 2013, and now they're saying, maybe through 2014, maybe the rest of our lives, folks. We won't have to pay interest on anything that we borrow, or just very little. What do you think of that? I'm not so sure about that one, but in any event here, so we've got a butterfly pattern that has completed, and if you were going to take a look at where would this pull back to, and pullbacks, folks, that doesn't mean you have to be bearish, if you will. Pullbacks are just normal breathing patterns, the way that markets go up and down. So you'd be looking for the Nikkei to pull back to that 0.618 area right here in that 8660 area or so. Let's go to our first caller. Let's go to Nick in Titusville. Nick, thanks for calling. Thanks for holding.
You're welcome, sir.
How are you today?
Good, yourself?
I'm doing great, thanks. Boy, can you believe this weather that we're having down here?
Oh, terrific.
I mean, this is Chamber of Commerce weather, isn't it?
It sure is.
Oh, man.
Couldn't get any better.
Yeah, nothing but Nick's on the coast if you will. He's over on the East Coast. We got the coasts covered today.
Right.
You know, as the crow flies, I probably have to go a little bit further. See, Titusville, I probably have to go just a little bit further north, right, to catch up to you. Yeah, and Mitch in Boston, he says a 34 there. What do you think? What's it going to be, about 84 where you're at today, Nick?
Just about.
Oh, that's beautiful. You wanted to look at AGQ. What's AGQ?
That's the 3-time silver.
3-time silver, okay. 3-time silver bull position. Are you in the position or?
No, I'm looking to see when is it a good time to go short on it.
I love the question. As soon as you see any sign of weakness would be my position. Let's just quickly throw up, take a look at our swing points. And the reason why you want to be able to take a look at it is because what silver did yesterday. Now you've had some juice in here. But silver did make a 0.618 retracement coming into the swing point from October 27th, just like we were looking at on the Nikkei. And it's made a move of a move, meaning it's gone over, and it's coming into the swing point from December the 1st. And the first sign of weakness in silver, I would say, would be a time to go short. So if you were going to play a short on silver, what's the vehicle that you would use, Nick? Would you use the ZSL since you brought up the triple here, or tell me what you were thinking of doing?
I was just waiting to see what the GSL was going to bottom out.
Okay, the GSL was going to bottom out. So I mean, are you going to actually take a short position, or you're just help me out here, then I can help you with the trade?
Oh, right now I'm just looking at it.
Okay. So, if somebody were going to go ahead and take a short position, what I would recommend that they do in these markets is I would recommend that they first understand what the average daily volatility. But, Nick, hold on the line if you would. All right, we're going to break. And, folks, you can get in on the action, 877-927-6648. We come back. We're going to see how these markets pop. Then we're going to go back to Nick and take a look at silver. We'll be right back, folks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You've got the Dow up 48 points. S&P's up 3, Composite up 8, Small Caps up 3, and we are on the line with Nick from Titusville. We got the bookends. He's got the East Coast, I've got the West Coast, and it's beautiful weather down here, folks. Come join us. We would love to have you come join us down here in Florida. Now, what we're taking a look at, Nick, is the silver. Taking a look at possibly how you would set up a trade on shorting silver. So I'm just going to use the ZSL as the vehicle for that, okay?
True.
All right. So the ZSL right now, it's trading out at 10:30. I don't know why my chart here isn't updating, so we're not going to worry about that, if you will. And so here's what I would do, because we're at this wonderful period where we've got inflection points, if you will, because we have all these patterns that are completing. And so what I would do is I would make this prove it to me. And the way that I would do that is I use the position size calculator. And folks, you can use the position size calculator for free. Just go over to the homepage at TFNN.com. You'll see that in the upper left. I'm going to pull that up on my screen here. And one of the reasons why I have you go to the position size calculator is to understand what the average true range has been over the last 10 trading sessions, okay? And over the last 10 trading sessions on the ZSL, the average movement on that is 65 cents. That means each day it moves up or down on average at least 65 cents. Then what I do, so now that we've got that number, we know our average true range, I'm going to take a multiplier of that number so that it picks us up along the way. In other words, ZSL yesterday closed out at 10:52, trading out at 10:30 right now. I'm going to use that 10:52 number to use to go ahead and calculate as far as where I want to enter my trade. Now, what I'm doing, Nick, is I'm taking that 65 cents and I'm multiplying it times 1.618. Why? Because we're in a super volatile marketplace, and that is a nice Fibonacci expansion, if you will. And so, you know, your volatility on an average basis can flow up or down outside of that out of that 65 cent range. And to me, if ZSL trades up $1.05 up above yesterday's close, so yesterday's close being 10.52, $1.05 would make that at 11.57. So if ZSL trades up to 11.57, it will have then proved to me that it's ready to start moving to the upside. Does that make any sense to you at all?
Yes, it does.
Okay, so that would be my entry point on the ZSL, would be 1157. Then you got to do the rest of the calculations to say, okay, is the right reward to risk in place for this? Well, the ZSL, and then we'll go over to the chart here, but I did the work while we were doing the commercial break here. And so one of the first targets that I would take a look at for the ZSL would be getting up to 1574. And that happens to be the bottom of the most recent swing point that is in there. It's in between a .618 and a .786 area. So on the, if you're using the position size calculator, folks, what you're going to do is you're going to put in your capital, whatever it is that you're trading. You're going to identify, is it a stock, a sub-index, a sector index, whatever it is. Are you going long or short the instrument? Even though we're going short silver, in this case here with the ZSL, you're going long the instrument. So bullish or long is what you would choose. Put in your capital. We know where our entry point is. That's going to be $11.50. We're not going to enter down now. It's trading out at 10:30. Let's say we're not going to enter right now. We're going to wait for the market to prove it to us. We're going to use a stop entry, if you will, and so we're going to wait for silver, or wait for the ZSL to get to 1157. Then, we're going to hop on board that bus and we're going to ride it all the way up to probably 1574, maybe a little bit more. So now we've done our work and we've already calculated our stop. So because this does this for you, your stop on this trade would be $10.52, because that would be outside of that. That would be the one. That would be outside of the average true range, and where we would enter, where we would take a look at exiting the trade is at $15.74. That would give us, Nick, a $4 projected profit on the trade. That would be a 4-to-1 reward to risk ratio. So if silver were to start backing down from here, this is actually a good trade. Now, I didn't know that until I took a look at it, until you called. But this is the trade setup for shorting silver. All righty?
I appreciate it. Very good, sir.
Any questions on that?
No, that's pretty good explanation.
Oh, perfect. All right, Nick, thanks for calling, and look forward to you calling again. All righty?
Thank you, sir. Have a good day.
You bet. You have a good day too, folks. So what you want to do, folks, when you get to these points in the market, and let me just turn this on and off here. I don't know why I'm having a data feed problem. I hate having data feed problems. That really makes an issue with regard to the charts. But what you want to do when you get to markets when they're at this point, and why it's such a cool opportunity, to be doing the show live, just like we did here with Nick, taking a look at silvers, because when you get to those points, when you get to those expansion points here, this is not about being right or wrong with regard to silver going up or silver going down, or is the market going up or is the market going down. This is about being able to step back, understand that what we're in is we are in the money business. We're in the business of managing money, of making money, and being able to utilize the tools that we have to be able to put on a trade and let the market tell us which way it's going to go. You could do the exact same thing that we did on the bullish side of the market. Not necessarily for silver here, but on anything that you're taking a look at, and let the market prove it to you, because we're kind of at those make or break areas inside the markets. We're at a point where, it's an exuberance, if you will, that is out there. Everything is great in the world, and actually I do think that everything is great in the world. It's really all up in your mind, but we're in the money game, and you don't need to be, this is not about being right or wrong. This is about making sure that you understand risk. In this case here with Nick, what I didn't do is I didn't tell him how many shares to, that somebody would take a look at. That's in case somebody's listening and they wanted to take this trade here. The number of shares per $10,000 on this trade would be 95 shares. So you would want to round that up to $100. You don't want to overtrade. What we've done here is if you did buy 100 shares of the ZSL, you'd be risking, and only, first our risk is 1%. 1% of our trading capital. So that means it's $100. That's a $100 calculation that we have down there. And the amount of our portfolio that would be out there that we would have to allocate to it would be about 11% of our portfolio. So risk and what it is that you allocate to your portfolio are two different things. Absolutely two different things. In this case here, how did it identify how many shares you should buy? Pretty simple. Once we calculated our stop, in this case here, we used the position size calculator. We used those average true ranges to help us do that. We took that 65 cents. Our system did. Multiplied it times 1.618. That told us our stop should be $1.05. Now, this is irrespective of swing points. You want to go back to the chart, take a look at swing points, maybe some high volume bars or something there. But the idea is to make sure that your stop is outside of the daily noise, because I can promise you one thing. I don't need to know whether the market's going up or down. I just need to know that I've got a probability on my side. And then when you're uncertain, let's say look, we're always uncertain with regard to where the market's going to go. When you get to these points here where you've got these really great inflections, you can just let the market decide what it's going to do and pick you up along the way. You can already have your bus ticket, if you will, your plane ticket, however it is you're going to take a look at it, already ahead of time. You can have your trade in ahead of time. You just sit back, and if the market doesn't move in our direction, we're not out anything other than the opportunity of taking a look at saying, okay, maybe we should have been long, but we haven't lost anything, as opposed to just saying, right now, I know this is a trade to get in. I'm going to go ahead and take it. I'm going to go ahead and fill it at $10.30, if you will. You don't need to do that. You can forego a little bit of profit in order to be able to get yourself what was more likely on the right side of the trade. In this case here, you could enter the ZSL. We know it could go up 65 cents, if you will, from where you entered, and you think you're on the right side of the trade. And what you and I now know is that's nothing more than just the average daily noise. That doesn't mean you're on the right side of the trade. If you start getting further outside of that 65-cent level, then that's giving you a pretty good indication that you're on the right side of the trade. And I say, make this market really prove it to us, because what is the market going to digest from what Ben Bernanke said yesterday? Is this the beginning of QE3? I don't know. It doesn't really matter. The market will tell us. The market will tell us, and utilize these patterns and what it is that we have going on in the market to be able to really play that money game. And so let's continue going around, taking a look at the markets. Let's see what we've got out here. We were in the world, if you will. We were taking a look at the Nikkei. Let's go see what's going on in Europe, because if we take a look at Europe, you've got the DAX is up 115 points. So let's go see, what does that mean? Why is the DAX up 115 points? Is that just completing a pattern that is out there? You've got the FTSE trading up right now, 71 points. So let's go take a look at the DAX chart here. Here is the DAX, and the DAX is trading out at 65.35, and you can see the DAX is up over its swing point from October 28th. Ours has been the October 27th level. Today is really its first time up and over, and what the DAX is trying to do, the DAX is trying to now complete an A to B equals C to D that would complete somewhere in this 6,800 area. 68, looks like about 68.30 on that. If we come back and let's take a wider look at the, that's a little bit too wide there. And we take a look at where's the 0.618 area. So now the range here on the DAX, what it's really trying to do is just simply get up to the 0.618 of the retracement highs coming off of the May 2nd area. That was the high not only in our market, but in Germany as well. And so if we take our retracement ruler from the high there all the way down to the low, excuse me, folks, all the way down to the low that we had in the DAX on September 12th, the 0.618 area is right in here at the, let me blow this up a bit now so we can take a look and see. Oh, that was blowing it up a little bit too big. Looks like it's right around the 65.95 area, and you're trading out right now at, no, not 65, 66.95 area. You're trading out at 60, good Lord, 65.38. 65.95 was the right area. You'd think I was drinking sake this morning or something, which I haven't been, but that will be a different story come this evening. I am sure of that, folks. Now, let's go see what the FTSE is doing out here. As long as we're taking a little tour around Europe, let's go see what they're doing over in London. And over in London, you've got the FTSE up over its October 27th swing point, and that is just simply trying to complete an A to B equals C to D up in the 59.05 area. The FTSE, which you also have up there at the 59.05, you can see right here, I'm going to guess this is the 0.786 of the larger retracement that is inside the FTSE. That is at the 58.22. So let's continue taking a spin around. How about our markets? Let's go dive into what we have going on inside the S&P. And the easiest way to do that, folks, is to take a look at the SPYs. And then the SPYs, the S&P is broken down into 9 sectors. They're all weighted a little bit differently. And let's go take a look at the financials. Let's take a look at the financials because they have been struggling at the swing point that we've been looking at here. And the, in fact, that worked out pretty well. It looks like we've got the financials popped up on the screen. So you got the financials trading out right now at 14.20. And the swing point that the financials are trying to deal with is it's right here. If I were to ask you to guess which date, you would probably say, hey, Steve, that's October 27th. Well, how right you are. So October 27th, the swing point out there on the financials, 232 million shares. You can see as you came into the financials the first time, you were coming into it on the, come on, work with me, cursor, January 23rd. A few sessions ago, you came in there with 80 million shares. Then the next day, you had 65 million shares. Yesterday, you got just above it. You closed at 1420. You did it with another 84 million shares. You know, what would be a beautiful pattern here would be somehow for the financials to spike up and complete this Gartley sell pattern at 1480. But, you know, that's a pattern that does not necessarily have to complete. If you wanted to go short the financials, what you would want is you would want to see it. You do the same type of calculation as we did with Nick when you were taking a look at the position size calculator. You'd want to understand what the average true range on the XLF would be. You would want to base any position on the underlying instrument, if you will. You know, folks can use there's a number of different doubles and triples out there that you can play in the financials, but you would absolutely want to have this pick you up along the way as well. Meaning you'd understand what the average true range is. You'd multiply that times 1.618, or just let the position size tool calculator do that for you. You know, so go over to the homepage at tfnn.com. If you haven't tried that, there's a video there that will teach you about using the calculator, and it will help to improve your trading. You want to understand, you know, just simply the daily noise that is out there. And in order to go short the financials, you're going to need to see it close underneath that October 27th high of 1417. But the more that it stays above it, the more that it says it wants to get up to this 1480 area there. Well, the financials are, I think, the second or third weighting inside the S&P. So if you do have a movement up into the 1480 area in the financials, you know, you'll see, you know, we're up right now about 55 points or so in the Dow. You'll see, and the S&Ps actually, let's take a look. The S&Ps are up 4 points. You'll see a much larger movement than that in the S&Ps. That would be with the financials. In fact, so let's go over and take a look at the SPYs. Let's see where I've got that here on my chart. So let's see what we've got going on in the SPYs. And give me a second here. Boy, this thing is slow. You would think that this thing was out, this computer system was out drinking last night or something. But we come back from break here, folks. We'll go take a look at the SPYs, see where they're at, and or you can give me a call, 877-927-6648. Dow's up 56, S&P's up 4, Composite up 10. How about Apple? Apple's up another $1 today. That's not too much. We'll be right back, folks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry, or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. You got the Dow up 65, S&P's up 5, Composite up 13, Apple's up $1.30. Only the top 10 in the NDX 100 is Amgen down $1.11. And let's go to Victor in Portland. Victor, thanks for calling. Thanks for holding.
Yeah, Steve, hi. It's nice to see you on the tube.
Hey, thanks for watching us. I appreciate that. Boy, we got what's the weather like on your coast these days?
Well, we just got through a storm and a fair amount of flooding. It looks like we're going to get some dry weather for a few days, so we're excited to see a little sunshine and
perfect.
Snow melt.
Okay, perfect. That's perfect. You wanted to look at the SOX, the SOXS. Tell me what you're thinking of doing here, and let me help you out.
Yes, I got my shorts on after the full moon, and
New moon.
Oh yeah, new moon. So I'm questioning my thoughts there, and I was wondering at some point, are we going to be able to Skype in?
Are we going to be able to what?
Skype in and
Skype in.
Yeah, so we can. Callers can be seen and you can be seen.
Well, I'm not sure. The problem with that technology is probably delay with the delay we'd have to be able to build in there just in case somebody did something crazy on the other end. I used to be one and had a great webinar last night. One of the businesses that I used to be in for a number of years in the theme park business, and I used to do a lot of ride photography, a lot of trip photography. And I opened up the Jurassic Park ride out at Universal Studios in California. And you'd be amazed at the pictures that the things that people would do on camera. So we had to screen those, because the park didn't want those things, getting out there, if you will. Yeah. So I'm not so. It would be a cool technology for sure, but I'm not sure. I'm not in charge of that. I'm not in charge of that piece of the game.
Well, it seems like you got some pretty good Tigers.
We do.
Be disappointed if someone.
No, we do. But every now and then you've got somebody that plays, I don't know, It's you know, they're focused on the wrong thing. That's for sure. But it's great, you know. But look, the reality is that, you know, technology is moving so quickly, and you need to take a look at the sector that you're in right now. You know, the SOX, the chip sector, and it's been hot. And so this is actually not a sector that I would want to be short, even on a pullback. Let's say if there were a pullback in the marketplace, I would not want to be short this sector. In fact, I would be looking to be long this sector on a pullback because of the strength that it's actually had inside there.
Yeah, I was hoping for a 0.382, and I was just looking. It was kind of long. I was thinking we're running long and looking for a nice little pullback to take some profits. But
yeah, you know, that candle on January 18th, you know, in the SOX itself, with 468,000 shares and you know, real strong move to the downside. You know, that was the first signal that you know, look out, because of the volume pressing down there. So, you know, the average true range, if you will, on this, just to take a look at it. And I don't know where your stop is or what have you, but hopefully you're using one. But the average true range on this thing moves an average of $2.30 a day. You know, that is just the daily noise. So, and you're trading out right now at 30. You're down, what, 69 cents for the day. It's down at 36.30. Closed yesterday at 37. So what that means is, if the average true range, this thing could easily get down to 35, 34, 34.70, and that would just be the normal noise of the day. You know, there would be nothing wrong with it traveling down to that area. So be careful, you know, if you are long this, and just make sure that you've got a stop in place. All right?
All right.
Hey, Victor, have a great morning. Thanks for calling, folks. Stay tuned. Tom and I will be up next doing the Money Masters. Then you got Kate Stalter from 11 to 12, Larry White from 12 to 1. It's a beautiful thing. Then Ken Shreve will warm it up for Tom from 4 to 6. Have a great morning, folks.